right, well, let's spend a minute on that NASDAQ rally. It is up right now 15% so far year to date. It's going to be the best quarter for the NASDAQ since 2020. One of the key components of that rally has been shares of NVIDIA, up 90% year to date. Our next guest has loved NVIDIA for quite some time. She comes on to talk about it. Let's get an updated view. We've got Ivana Delaveska, founder and CIO of Spirit Invest. Ivana, before we get into some of those components, let's just talk about that NASDAQ strength. You know, it kind of came in waves in January. It reemerged again in March. What does that tell you about how investors are thinking about this sector, especially after a pretty ugly 2022?
Well, Amber, you're spot on with the ugly 2022. I think that's driving a lot of the upside here. As we saw earnings bottom, we are seeing a lot of potential for improvement going into this year. And another driver is interest rates, right? So interest rates have stabilized between 3.5% and 4%, and that's really providing valuation floor for this stock. So looking into the rest of the year, it's going to be all about earnings. If these companies can deliver even slightly better earnings, we see a lot of upside potential.
And that has been kind of a concern, especially for large cap tech. But they've done a lot when it comes to cost cutting, most of that at the expense of jobs. So is that where we could see the surprise kind of on the expenses side of things, juicing the bottom line versus, you know, any material gains in revenue? Or is there also a revenue surprise for us?
So we believe at the beginning of the year, cost cutting will be a major theme for the large caps. And then some of the early cycle areas like semiconductors will start seeing earnings improvement as well in the first half of 2023. As we look into the second half, we think there will be a broader enterprise recovery. So you will see cloud infrastructure stocks, semiconductor stocks, those are still trading near their lows. So we expect to see those recover in the second half of this year.
So I'm looking at the semiconductor index, which is now trading at the highest level in almost a year, call it an 11-month high. Do you think there's an opportunity to rotate out of semis and go into those cloud and infrastructure stocks, or are you still preferring to stick with the semiconductors?
Well, we have a pretty balanced portfolio. We disclose our holdings on our website at spearinvest.com. So we have a pretty balanced portfolio between early cycle semi stocks and cloud and infrastructure stocks. You don't want to be taking profits too early in semis because the cycle has just turned. So we do expect this upside to continue, but you do also want to own some names that can double from lows here, basically.
Okay, so NVIDIA has already done that. And I know that's one of your top ideas and has been your top ideas. Are you still holding on to this name? Wouldn't it be prudent at this time to kind of take your money and invest it elsewhere?
So, Amber, NVIDIA is a very unique situation. The company has a very special position in AI. They were very early to this. They started investing several years ago, and they established themselves as a leader on the hardware side, and now they're introducing solutions even on the software side. So if you want to play AI, this is really the most obvious way to do it, where you're actually going to see earnings come through as AI adoption grows.
So I know there's a lot of hype and interest around AI, but NVIDIA is kind of this perfect example where, you know, it's not yet showing up in their results, but there's a lot of enthusiasm around it, and people think that that's going to be an area of spending going forward. But have we actually seen this materialize? Is this another hype cycle like metaverse? And what gives you confidence, I guess, that it's not? What are the data points you're looking at?
So we're looking at their data center segment. The company guided for growth quarter over quarter, significant growth expected in the first quarter of this year. This segment basically plays on AI, but also contains a lot of new product introductions that the company introduced this year, which is the new Hopper architecture. So this new Hopper architecture carries significant pricing upside, and as companies adopt it, you will see a boost to the data center segment. And we're already seeing this, by the way, even in this quarter, where broader cloud spending is down, but this segment is able to outperform.
And is that, do you expect that, I guess when you look at headlines like, some of these major tech executives, calling for the halt of AI development, at least for 6 months, and warnings increase about the consequences to humanity, will that give businesses pause on kind of, spending on AI to get their tech up to that next generation of technology? How do you think about things like that?
Well, I do think that was a pretty interesting announcement. From what we see today, AI is still in the very early innings. We don't see it posing a major threat. We see it actually as a big productivity improvement driver. So even if you look at industries, people look at ChatGPT and immediately think, oh, this is going to replace writers, or they look at Copilot and they think it's gonna replace coders. That's not exactly how this works. What this is gonna replace is mundane tasks that nobody really wants to do, and let people focus on creative things where they can actually add value. So we do see it actually as a pretty meaningful positive. If you look at industries like YouTube, the creative, like the media side, all of this is really made possible with AI, basically being able to place your product into an audience, not having to go to some bureaucratic process of a media company, right? So we really see it as a big positive in the near term. I think the pushback is coming from people that are behind in AI and in spending. So we'll see how it develops, but we see more the positives than the negatives.
I want to just ask about your investing approach, because as you mentioned, this ETF is available, SPRX, and you're looking for kind of breakthrough technologies. You've even got Shopify in there. And do you hold that conviction even if the market turns against tech? Are you able to be nimble and move to cash within that ETF, or is your motto to kind of stay fully invested because you're looking at that long-term horizon?
Our mandate is to stay fully invested, but what we do a lot of is try to find opportunities where the valuation is right. So a lot of these companies that you see that we hold today, we have added over the past 6 months. So it's really all about, it's not just the hype and following themes, it's all about finding the right entry points and right valuation levels to get into these companies.